Hi, Jonathan York by Financial Partners, looking at investment markets. In the end, September didn't turn out to be too bad a month for US equities. First time for a number of years that actually had a positive month. As historically, September and October are pretty shaky for equities. Now, after the rate cut from the Fed, mortgage refinancing has picked up in the US. Although term rates have nudged up just a little bit, that 2-year is back at 364 and the 10-year is back at 378. Now, the Fed don't meet again until November, so it'll just be very interesting to see what data comes out in the month of October. And that all starts with the employment data this Friday. Now, the election is just over 4 weeks away now, and getting pretty tight out there in terms of the polls. It looks like the Democrats still have a little bit of forward momentum going forward. And certainly the Republicans are trying to keep ex-President Trump on track as he keeps going off script. Now, obviously, the escalation of the Middle Eastern conflict with Israel now attacking Lebanon, as well as the conflict in the Gaza. And that's seen oil nudge back above $70, currently around 70.50 and change. OPEC Plus did postpone a potential increase in production. Obviously, with the Israeli conflict, it's almost forgotten about with the Russian-Ukraine. That's dragging on now. And in February, that will be entering its 4th year. Now, in the UK, the government's grappling with the hole in the public finances, talking about sort of potential pension reforms. But all the time with inflation falling, we're just waiting for the Bank of England to signal its next interest rate cut. Now, likewise, in the EU region, you've got French CPI is down at 1.5, Spain is around 1.7. It looks like uniformed EU inflation rate is close to 2% now, so we're just waiting for the ECB to cut interest rates again. Now, the Reserve Bank in Australia left rates on hold. Probably no real surprise, although obviously with the Fed moving 50 basis points, there was some sort of thought that the RBA might just sneak in a 25 basis point cut. But on projections, what it does look like is the first cut in Australia will come in February. And after the big stimulus package in China, it's just going to be interesting to see what impact that has on the Australian economy. Certainly iron ore is hovering around that sort of $100. Now, here in New Zealand, the Reserve Bank meet next week, and one expected to see an interest rate cut of at least 25 basis points. Potentially 50 might be on the table, obviously after the Fed cut by 50 basis points. Because after that meeting, there's just one more, and then the next meeting isn't until February. Now, a little bit of good news for the dairy sector. The recent dairy auction, that was up around 1.2%. But also as well, Fonterra have now increased their payout and looking like a $9 for the mid price now. That's obviously good news for the dairy sector. And also as well, latest surveys, consumer confidence keeps on nudging up, same as business confidence as well. And that's really all on the back of the first interest rate cut from the Reserve Bank, and then obviously signaling that they're looking at having a cut probably at every meeting going forward now for the next sort of 5 to 6 meetings at least. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we'll look forward to speaking to you soon.